Hey, welcome everybody. Let's talk real estate. Your weekly BS with Barry Saywitz about the current commercial real estate market here in Southern California. As we take a no BS look at both sides of the issues driving this market today to find the best solutions going forward. With our man right in the middle, it's Barry Saywitz. Hey, Barry.
Hey, good morning, Paul. Welcome back to everyone, all of our listeners and our viewers out there. We're back for another week of Let's Talk Real Estate. I am Barry Saywitz, president of the Saywitz Company and managing partner of Barry Saywitz Properties. And if there's one thing I've learned in my 30 plus years of doing this, it's to look at both sides of the equation and try and make an intelligent, informed decision based on whatever it is that you're doing in terms of putting a deal together. And so today is no different. We're going to look at both sides of what's going on in the residential real estate market. I know we're typically focused on the commercial side of things, and we've looked at a lot of different aspects and niches in the market, but I'm excited today about today's show because we always talk about the housing market, and today we get an opportunity to do that. Our guest with us today is Jeana Sander, who is Vice President of Berkshire Hathaway in Orange County. She oversees 9 offices and approximately 700 agents and has a 25-plus year career in real estate. Jeana, welcome to the show.
Oh, well, thank you. I'm happy to be here.
Yeah, and so a little fun fact for our viewers out there before we get going. Jeana and I do go ways back a little bit. We went to high school together in La Jolla and San Diego, so we've known each other for quite a while. I'm excited to have you here in Orange County and excited to have you on the show and excited that you're doing well.
La Jolla High School, class of 85.
That's it, Vikings.
Yes, go Vikings.
So the exciting thing is I actually get to talk about the residential market because in the day-to-day stuff that we do in our office, it's not so much houses, it's apartments and office and industrial and other things. And whenever I meet somebody, they say, what do you do? And I say, I own a real estate company. And they go, oh, how much is my house worth? Or, hey, I'm thinking about selling my house. Or even last week, a guy came up to me and said, hey, I'm thinking about buying a condo. Can you help me? I said, no, that's not what we do. But those are all the questions that I think actually happen around the dinner table or happen at the lunch table or in the conference room because everybody either owns a home, would like to buy a home, is thinking about buying a home or refinancing or something to that effect. So today we're going to talk about it. So before we get going, in terms of your background, I mean, you've been doing this a long time for a number of different well-known real estate companies. I guess just give our listeners and our viewers out there a little bit of a background in terms of what you've been doing on your end.
So I started in real estate about 25 years ago and owned my own commercial real estate company, got out of that and went into residential real estate. I specialized in new construction and development in La Jolla and as an agent, and then I went into management in La Jolla and then was recruited out of there to Orange County about 5 years ago to manage up here, and then got into leadership with Berkshire Hathaway as the vice president of Orange County, and having fun all the way.
So you get to go around to all the different offices that they have and meet different people all day long and hear from the people that are in the trenches every day doing what they do.
Absolutely. I'm interacting with, many large number of agents throughout the day and managers and affiliates within the industry. So yes, I mean, I've got a definite pulse on the heartbeat of real estate in Orange County and see it and feel it and dealing with it every day.
Yeah, and Berkshire Hathaway, great company, great name, great ownership. In terms of the company itself, are they in a continued growth mode in terms of recruitment and expanding? And how does that go from a corporate structure?
Yes, we're constantly expanding as a brand. I mean, we have our Berkshire Hathaway Home Services, California Properties is the company that I work for. We have about 45 offices in California, stemming from like La Mesa, South San Diego on up to Santa Barbara. And inland as well in Los Angeles. So we have a number of offices. I mean, we did about 11,000 units last year, 18 billion in volume. And so we do a significant amount of residential sales in California. We are actually investing more money into our mortgage affiliates as well. So we are rapidly expanding as we progress. We have a lot of we're part of the Home Services brand. We're a very strong brand, and so a lot of companies companies want to partner with us, and so there's acquisitions as well. We just brought on an acquisition with an escrow company as well.
That was my next question.
Yeah.
So it would be a logical foray into the escrow side of things to control or have your finger in all the different pieces of what happens in a transaction.
So I specifically oversee the residential real estate part of it, and the escrow and all of that is another element of what I do. But I specifically am in the residential real estate side.
Yeah, but the Berkshire brand, I guess, oversees the whole process at this point.
Yes, and we have title, and we have escrow, and we have mortgage. So we are very much in tune with the agent's needs and servicing whatever they need for supporting them and their clients.
Yeah, and major player in the market.
Yes.
So let's talk about the market for a second. I want to rewind, and we'll get to today. But if you go back to before COVID, the market was chugging along from my perspective. Everything was fine. Prices were sort of ticking up. And then all of a sudden COVID hits. And from my perspective, I'm curious yours, certainly 2020 when COVID started sort of shut down everything, the whole economy for a blip in time, which then created this lack of supply, which then sort of led to the COVID and sort of into the post-COVID era in terms of this supply-demand issue. Is that sort of how you guys saw the market changing?
Well, I mean, I think the market during COVID was something that none of us could foresee or knew what was going to happen. I mean, when COVID hit, none of us knew where the real estate market was going to take us. And it was a black swan market. I mean, for everyone, it seemed that home was more important than ever because we were working from home. It's that space is having your families, and we just saw in the beginning people were afraid, we didn't know, but then it just opened up, and it was crazy, and it was insanity, and lines wrapping around the blocks for people to view properties. Interest rates were historically low. We'd never seen interest rates this low before at 2%. So it was a really wonderful market to be in to purchase property, but the lack of inventory was a challenge, was a big challenge. But yeah.
I mean, and you saw really bidding wars. I mean, you still have it to some degree, although it's slowed down a bunch now, but you really did have bidding wars because of lack of inventory. And then the combination of I'm working from home, either part-time, full-time, combined with those low interest rates and no new construction because all the construction was shut down.
Yes, construction was shut down, and absolutely the bidding wars were really interesting. I mean, our agents were, being very careful, and we had, PEDs. They were, ways that we were bringing in clients into properties and making sure that they were safe and social distancing and wearing masks. But they would have to check in and make appointments, and we would see, hundreds of people show up to some of these open houses. It was an interesting market.
And did that apply to all the different classes of price category? Because when I look at it, I break it down to sort of lower price point, mid price point, and then sort of expensive homes in Orange County. And a lower priced home in Orange County is not so lower priced.
Yeah.
But stuff under $1 million was going like candy.
It was an interesting market, yeah. And we saw, that, properties priced below $1 million, that inventory level shrink because that's the largest buyer pools and those price points. But in pretty much all of our markets, it was even interesting to see in the luxury market just across the board in California. Last year we saw anything above $5 million. We saw a 77% increase in sales. With those price points of above 5 million, and that was just in California.
Yeah.
So across the board, we saw the luxury market was, really on fire and very active. But again, getting down to properties priced below $1 million, that was a very, shrinking market of inventory, and that's where most of the bidding wars were. Well, they were bidding wars in every price point, really.
Yeah, and then you get people that would get boxed out, so the next time they go to bid on something, they'd offer more, and then after you get bid out like 3 or 4 times, then you start throwing something stupid because you have to, and then you're the stupid guy who gave the ridiculous bid, and then it churns the market some more. It's sort of a self-fulfilling prophecy.
Well, we shall all see how this all pans out, and people, I think, may have felt that way in certain circumstances, that they may have maybe overbid on properties.
Yeah, and I guess, we talk about it all the time. If you're in it for the long haul, if you're buying something to fix it up and flip it, then certainly you have risk of buying at the top of the market. But if you bought the home and said, I'm going to live here for 20 or 30 years, I guess it really doesn't matter as long as you can afford it.
Real estate is a wonderful investment. It's the biggest wealth builder that you can use in your investment portfolio. I mean, look at you, Barry. How many properties do you own?
At least one.
Okay. But I mean, I've never met a homeowner or anybody that regretted buying a property 10 years ago, ever,
And so when the market, I'm gonna go back for a second, but last few years, did you still have an influx of foreign money coming into the market? And were some of these buyers people that had made money in the stock market or had made money from other avenues that was also helping churning it, or was it all local people that were already here that were selling and trading up? It seems to me like maybe it was a little bit of everything.
It was everyone. I mean, everybody wanted to invest in property, but we saw a lot of, we always see a lot of, foreign money in our market, especially in our coastal markets. We've always seen that investment money, and we always see even more, I think, foreign investors when we see stock markets getting a little bit crazy or there's unrest. We'll see foreign money, come into our markets because it's a stable market here. Right.
So let's fast forward to today. And so now you have rising interest rates. Rates go from what was, I'm going to call it 2.5% at the beginning part of the year, to today what might be 5.5%, going to 6.5%. And for what that means for the average person out there who's thinking about buying a house, effectively your mortgage payment has doubled from what it was before for the same home that you could have bought because the interest rate doubled.
It's been interesting. So at the beginning of the year, we started off at 3.25% for our mortgage rates, and we had the lowest inventory ever in history. We had below 1,000 properties on the market. We'd never seen anything like that. It was such an anemic inventory. Today, we are at 5.77, I think, is our interest rates. So that buying power is not as strong as it was when we had lower interest rates. So that certainly affects what a buyer can purchase because of that buying power with the interest rates.
Yeah, and so for the entry-level home buyer, for those homes under $1 million, that mortgage payment just goes up that much more and takes a bite out of your pocket. For the higher valued properties, number one, the numbers are staggeringly bigger, and then number two, if you weren't getting a mortgage or you're getting a smaller mortgage, maybe it doesn't impact you as much. But for someone who was trading up and trying to bite off an even bigger piece of what they were doing, it just makes it that more difficult.
Absolutely, and we've seen some buyers get into their escrows and the interest rates. Maybe they didn't have that locked in, and interest rates weren't changed, and so that was a challenging piece for them to bite off on their monthly, mortgage payment, and so they had to rethink that purchase. So, it's very important right now for buyers to lock in those interest rates, and really look at that before they enter into an escrow.
And do you see, because now, I think people's expectation is that 3% rate or whatever that number was, that's yesterday's news. I'm not going back there anytime soon. So if the perception is that interest rates could go even higher, which I expect that they will in the next couple of weeks, then what does that do for my expectation of purchasing? And do you start to see, from what you're hearing from your folks in the field, some of the retrading of people getting nervous and pulling out of deals or going back and trying to haggle for something off the price? We see it on the commercial side for sure.
Well, we're definitely not seeing values drop. We're seeing, as far as, with our inventory, we still have, anemic levels of inventory. We have today 76% less inventory than we did pre-COVID. So when we're looking at that and we're seeing what a buyer can do, most of our buyers, they've been watching this market. They're a little bit, it's all over the news. They're watching it. They're mother, father, brother, sister just bought a house, and so they're watching this. So we've seen some buyers, rethink this or their purchase price because of the interest rates gone up during escrow, but it hasn't been like a significant, cancellation rate during escrow that we're seeing right now.
Yeah, and the inventory is still very low. So from a seller's perspective, if somebody came back and wanted a better deal or wanted to retrade it, they might just say, no, thank you, I'm going to go to the next guy. And then you're back on the sidelines as a buyer again. So that's the dilemma, I think, where you're in an uncertain period where maybe there's a bit of a disconnect between buyer and seller from what you see on the news.
Well, we're definitely seeing, sellers having to really inform them of current market conditions. We are seeing, demand is down, and demand is, when you put a for sale sign in the yard, and when it closes escrow, it's pending properties, and we're seeing our inventory levels raise. So we've seen about a 9% increase in inventory levels in the last 2 or 3 weeks. But again, like I said before, we're still at anemic levels for inventory, and what we're probably most likely going to see is demand is going to be is diminishing a bit, which is a good balancing of the market, because the market was pretty insane.
Right. And so what the average person doesn't really understand is that while you look at it in a window today, a normal market, you don't sell your house in 3 days with 10 bidders and people all bidding over the asking price, or that the asking price is a suggested price and you have to pay me more than that. The expectation was so high and so ridiculous and disconnected that in a normal market, if you look historically, and you would know better than I, it's supposed to take like 60 or 90 days to sell your house.
Precisely.
Right? Not 2. And so when it doesn't sell in 2 or 4 or 10 days, somebody says, well, what's up with that, right? And so then you're back to the agent side of educating your client about where the market is and expectation.
Exactly. I had an agent call me, just last week, and their seller was mad because they put the house on the market on a Friday. Saturday and Sunday, they didn't have any offers. Monday, the seller calls them and says, I'm upset. Where's my offers? What's wrong with you? And my agent said, well, this is it's a shifting market. And an hour later, they get an offer. It's at full list price, and they call the seller and they say, okay, we got an offer for you. And the seller says, where's the rest of the offers?
Right. The expectation's so off the chart. The other thing too is that I'll say this as politically correct as I can. To get the listing, to some degree, I need to agree with the seller in terms of whatever their expectation is, because I want to get them whatever it is that they want. But if the seller's expectation is, my neighbor sold my house for X, mine's nicer than his, in my own opinion, and therefore I should get X plus. And so I list it at a number that is the next level up. And if I don't get it and I have to come back to that same level, the perception is, oh, they dropped the price. Oh, the market is soft. When in fact, all you did was go back to the number that it should have been at the first place, right?
Exactly. Exactly. I mean, right now it's very crucial that you're pricing properties, correctly in this market, or you're going to be chasing the market down.
Yeah.
So, and you really need to make sure that when you're engaging with the seller and you're having a discussion about pricing, that what's really important too is also looking at what their competition is, because that's really where the market is now, is what their competitive properties are.
And so what do you attribute the increased inventory to? Is it a decrease in demand, or is it people getting off the fence saying, oh, I think the market's topped itself out and I better do whatever it is I was going to do before it goes down, if that's my perception?
There's a number of reasons why we were seeing the market that we're seeing. I mean, when we had the low interest rates and we saw the huge influx of refinancing, we had a lot of people, sit in their homes and they've got these 2% interest rates, and they've got this amazing affordability in their homes right now because of their interest rates. Those guys don't want to move because they're thinking, my goodness, what am I going to be able to
pay 5 or 6, right?
Exactly. So it doesn't really make a lot of sense for them. They don't really want to do that. Demand is down. We are seeing that. There's it's I think it's actually kind of a little bit of a necessary adjustment in our market because it was so crazy. But interest rates are part of that. that's the conversation with the interest rates is that's like I said, affecting the buyer, purchasing, property. And so that's a market adjustment there, right?
Yeah.
And that will affect how many properties go into escrow, and that affects demand.
And I think too, the average person who looks on the internet or sees on the news, they run a story about, real estate markets. I saw an article yesterday. They said top 10 real estate markets likely to decline in the next year. And they were all on the West Coast. It was all up and down California, Seattle, Arizona, and everything was on the West Coast. And, you see stuff like that and then you start to believe it. And to me, in a changing market, you either rely on the statistics and what the information really tells you, or to some degree you have public perception, and then it's a self-fulfilling prophecy. And so it'll be interesting to see the average person of how they react to it, because when you see a price drop, you automatically assume the market's soft, but you don't know anything behind why there's a price drop or whether it was a stupid price in the first place.
Well, exactly. But I mean, we see and hear a lot of things that aren't really truthful. California remains a really wonderful place to invest your money. The average homeowner in California last year, just sitting in their house, made $149,000. So, it's a wonderful, wonderful market where you just sit there and your property appreciates in value. So that's year-over-year numbers.
And the flip side is, if you were in a smaller home trying to get into a larger home or upgrade, right, you still have the same issue that you had before, which is my home is really too small for me. I mean, there's want and there's need. And again, I still have this, I'm going to spend more time at home. I still want a backyard, front yard, patio, whatever it is that I need. And in order to get that, I've got to go make that decision to move up. The other side of it is you have the rental market, which has continued to go up. And so the people who were trying to buy a home that were renting, they are stuck then paying more to continue to rent while they figure out whatever it is that they're going to do.
Yeah, it's been really interesting to watch. And, like our entire real estate market, even the inventory in the rental market was, drastic.
Next to nothing.
It was next to nothing.
Yeah.
And we were seeing, I mean, it was crazy to see some of the rental rates and those increases in those properties and what people were getting for their homes. It was interesting.
Yeah, and I talked to someone last week, and they had a place for rent in Newport Beach, and I said, how many calls did you get? And she said, I don't know. My phone is blown up and my voicemail's full. I can only tell you. I said, what do you think that's attributed to? So I think I priced it too low, but I could also tell you that I could have raised it another 30% and it wouldn't have slowed down the volume, maybe a little bit, but all I need is one good person, right? Mm-hmm. So that gets back to your supply demand.
This was a conversation I just had with an agent last week in one of my offices. They had 45 calls, 45 applicants on one rental property.
Yeah.
And this was, maybe a $4,000 a month property, but there was 45 applicants. And going to the landlord and saying, okay, 20 of these guys are great. Which one do you want to go with? It's a challenge.
Right. There's no question. And then for the renter out there, I think it's still going to be a struggle. Number one, you have, again, limited inventory and limited options. You have rising prices just because of supply and demand. And then you're precluded from buying something because it just became more difficult and the goalpost got moved a little bit further away from you. So
exactly.
So let's talk about where you foresee it going between now and the end of the year in terms of just trends in general in the market, because you're hearing stuff from your agents out there in the field every day. There's this window of time trying to adjust to these interest rates. But the question that people always ask me is, will the supply-demand issue, because there's still very low inventory, supersede higher interest rates and then just the perception that maybe the market is changing? And how does that dynamic play together?
We're probably going to still see interest rates rise before the end of the year. We'll probably see a few more hikes. That's what we're all, considering or thinking that might happen. And that will definitely affect the purchase power of a property. We're not seeing values drastically drop right now. We just don't see that happening. But we will see more inventory come on the market. We already are seeing that. We have seen demand, slow down. For a seller right now, if they're wondering or thinking about selling, you don't want to snooze and lose. You better get your house on the market right now. this is a very hot market, which we're, it's typically a spring market. It's a very strong market. Then they go into escrow in the spring, and then they close at the end of July. We see that's a very hot market. And then the next one would be the summer market. So, we if you're a seller right now and you're thinking, I don't know if you should definitely get it on the market right away, because we're going to be seeing more inventory come on the market towards the end of the year. I foresee and think what we're going to see with the market is we're going to see the market time increase a bit for properties, and probably more of a balanced market, like you had referenced earlier, between 60 and 90 days, which will just lead us to more of a balanced market. That's where I see our market heading, but I don't see anything dark or Chicken Little, doom and gloom, or anything like that happening with our market. Our properties have appreciated so much. There's so much seller equity in our properties, and we start looking at anybody talking about recessions and all that. It's we just don't have the market conditions for that I see. I mean, prior to the last big recession we had 5 times the property on the market, so we had an influx of inventory. We still don't have that.
Yeah, I think that's going to be really the biggest determining factor is the volume of inventory, whether it's the commercial side or the residential side or the rental market. If you have limited options, you just have limited things to go with. And so if you don't have 45 people calling and you only have 15 people calling or 10 people calling, yes, that will impact it. And as an agent, I think you're just going to have to work a little harder and a little smarter, and it's just not falling from the sky into your lap. But that's how the world works anyway, right?
Exactly. We're looking at more of a normalized market. For agents that got into this industry and are newer agents, they've only known this crazy market. For the rest of us that are a little bit older and have seen a few different kinds of markets, what was the first property that you bought, and what was your interest rate? Do you remember?
I don't even know, but I know I've had interest rates over the years anywhere from 7% down to as low as 2%. And so if you're still getting a mortgage rate in the 4s or in the 5s, relatively speaking, it's a perception. It's still not a terrible deal.
Exactly.
It just stinks relative to yesterday's deal, and you missed that boat, it left.
Exactly.
So,
exactly.
And in terms of Orange County in general, I mean, the desire to be here from people outside of Orange County, the desire for people to stay here that are in Orange County, where do you see the demand for wanting to own property in Orange County still high?
Oh, Orange County is a coveted area. Any of our coastal markets in California are very coveted areas. I mean, this is why our properties are priced where they are priced, and we have some of the highest price points in the country. And the coastal markets are always a little bit more insulated in any kind of a shifting market. And also Orange County, there's a limited amount of properties right on the coast as well. So it's a very, I would say, a pretty stable market. I mean, we don't have, even in the last recession in our coastal markets, we didn't see, scary things happen, because they're very coveted, fabulous properties, and everybody wants to live here.
Yeah. No, I think that Orange County is still the place to be. You're paying for the sun, you're paying for the ocean, you're paying for just all the good things that we have here. It'll be interesting to see what happens to the property values, what happens to the dynamics of the real estate market as we go forward, and we'll just see how it plays out between now and the end of the year. So I told you it would go fast, and then they're waving at me that we're out of time, and we're done,
possible,
right? You
Barry?
blink and it's over. We could go all day.
Yes, we could.
And chit chat about it. But I guess one final thought for our viewers and our listeners out there: if you're a seller, do you get off the fence and go now?
Absolutely. Absolutely.
And if you're a buyer and you were thinking about buying,
lock in that interest rate.
Go.
Get
right?
out there. Right now is a great time for a buyer, because they're going to have a little bit more properties to choose from, and it won't be such a competitive market. So it's a brilliant time for buyers to lock in an interest rate right now and go buy.
And for those buyers who have been sort of dancing around and kicking the tires, get your package together, get pre-approved, get yourself locked and loaded. I think you'll be in a better position to strike, and then maybe you'll get the place that you want and live happily ever after.
Well, precisely, because if interest rates were to rise even higher, they're going to be happy that they bought today.
Yes, for sure. And so how do people reach either you or the company at Berkshire Hathaway if they are interested? Because I'm thinking about buying a house just talking about it, and I want to call someone.
Well, we are Berkshire Hathaway Home Services, California Properties. I can be reached at 858-353-4033, and I can put anybody in contact with an agent in their area that they'd like to purchase or to sell.
Perfect. So I appreciate you coming on. I knew it was going to be something that was exciting to talk about, and hopefully our listeners and our viewers out there picked up something. Again, summary: if you're a seller, sell it, and if you're a buyer, go buy it, and if you're not, then sit back and have a drink and go to the beach. But for everyone here, I want to thank our whole team at OC Talk Radio, Paul and Sophia, and all the people that make the show happen. I am Barry Saywitz, president of the Saywitz Company and managing partner of Barry Saywitz Properties. And if it's Tuesday, it is Let's Talk Real Estate. We'll see you back here next week, and we will talk some more. Thanks for tuning and listening in, and we'll see you next time.
All right.
Well, there you have it. You've been listening to Let's Talk Real Estate, your weekly BS with Barry Saywitz about the current state of the real commercial real estate market right here in Southern California. On Orange County's only community radio station, OC Talk Radio, streaming live from our studio here at the University of California Irvine's Beale Applied Innovation Center.